Hello everyone and welcome to Study IQ English. I'm Joycey Joy. In this video, we'll be discussing about Narasimham Committee 1 recommendations. Why Committee 1? Because there were two Narasimham committees in Indian banking history. This is the first committee established under the chairmanship of Mr. M. Narasimham, who was the former governor of RBI. So we'll be discussing about this committee in detail. Let's get into the details. So, when the Indian economy was liberalized in 1991, it was considered that the banks were working inefficiently. We know that in the year 1991, we adopted the new economic policy, that is a NEP. The new economic policy had three pillars: liberalization, privatization and globalization. So these were the three pillars of LPG policy or the new economic policy. And at the time when our country adopted the 1991 reforms, it was thought that, or it was found out that the banking system in the country was not very effective or very efficient in the performance. And how does efficiency is counted? Efficiency is counted in terms of two parameters. One is profitability and second is competitiveness. So these are the two parameters with which we count or measure the efficiency of something. So banking system in India was considered to be ineffective or not very competent in order to adopt the reforms. Or in simple words, we can say that in order to go in lines with the 1991 reforms, especially globalization and liberalization, would welcome private entities, private banks and foreign banks into the country. So the existing banking system in the country was not competent enough to compete with the private sector banks or the foreign sector banks. And to bring reforms in the banking sector, the Narasimham Committee 1 was established. The first committee was established. The official name of the committee was Committee on Financial System, and the chairman of this committee was Mr. M. Narasimham, who was the former governor of RBI. And from this, the committee popularly came to be known as Narasimham Committee. From the name of its chairman, it got its name Narasimham Committee. It's popularly known by this name. During the economic crisis, it became clear that banks play a very critical role in the economy and the banking sector needs to be more competitive and successful. The Ministry of Finance, led by the then Finance Minister Dr. Manmohan Singh, formed the Narasimham Committee to examine India's banking industry and make recommendations to reform the banking industry in India. So this is the history of Narasimham Committee. Going on to the recommendations of this committee. These are the major recommendations given by this committee. Even though these recommendations were given way back in 1991, these are very relevant in the current context and these are very important to the existence of banking system in India even today. So that's the relevance of this committee. For any competitive examination, this committee is of utmost importance and we'll be discussing it from that perspective. First recommendation was to reduce the CRR and SLR in a phased manner. We have already discussed about CRR and SLR in quantitative tools of monetary policy. Just recollecting what is CRR and SLR. CRR is cash reserve ratio. CRR is cash reserve ratio and this is the percentage of deposits that the banks has to keep with RBI. Percentage of deposits banks have to keep with RBI. Then coming to SLR, which is statutory liquidity ratio. Statutory liquidity ratio. This is the percentage of deposits. Percentage of deposits banks has to keep with the banks itself. That is statutory liquidity ratio. Now, what is the relevance of both these tools, monetary policy tools in monetary policy making? When CRR and SLR increases, the money supply will increase. Why? Because when the ratio of deposits that the banks have to keep with the RBI and with itself increases, there will be lesser money or lesser liquidity available with the banks to create credit in the economy. So for that reason, this will reduce the money supply. So we have already discussed the concept several times. That's why I'm not repeating it. When CRR and SLR increases, this will reduce the money supply. So first recommendation of this committee was that CRR and SLR should be reduced in a phased manner. And what will be the impact of this? This will increase the money supply in the economy and thereby credit creation in the economy will increase. Second is priority sector lending quota should be reduced from 40% to 10%. Now, what is priority sector lending quota? This means a particular percentage of the total credit or the total loans of the banks should be given to priority sectors like agriculture, export credit, housing, renewable energy, MSME. All these are priority sectors. Now, when the percentage of loans given to priority sectors increases, what happens? This has a greater chance of creating NPA. So, NPA can increase, non-performing asset can increase. Now, the recommendation was to reduce the priority sector lending quota from 40 to 10%. This was not accepted by the government, and this was one recommendation of the Narasimham committee that the government did not accept. Why? Because as a government, it is always oriented towards welfare than making profit. So, priority of the government is to ensure welfare of the citizens of the country. So, this recommendation was not accepted. Third one, RBI should grant licenses to new private sector banks and foreign banks in order to promote competition. This was in line with the 1991 reforms. Why? In the 1991 reforms, we decided to liberalize and globalize our economy so that more private players and foreign players will be allowed to come and operate in the economy. So for that reason, it was recommended that RBI should grant licenses, and this recommendation was accepted, and thereby RBI created the Bimal Jalan committee in order to give recommendations regarding licensing of new banks. We will be discussing about Bimal Jalan committee in detail in the next video, in the upcoming videos. Next is RBI should adopt Basel norms for the regulation of banks. We will be discussing about Basel norms in some detail in this video itself. So, RBI adopted the Basel norms. Basel norms are international standards, and RBI started adopting Basel norms after the recommendation of Narasimham committee. Next one was to give more autonomy and accountability to the public sector banks. One of the major problems public sector banks faced was the excess of political intervention and red tapeism. Why? Because the public sector banks are owned by the government itself. So there was excess of political intervention in the day-to-day working of these banks. This created inefficiency in these banks and also did not let the banks do their business properly. Whenever there is a political intervention, it slows down the entire activities of the bank. So this committee recommended that the public sector banks should be given more autonomy, that is reduce or nullify the political interference, and they should be allowed to operate in their own terms. That was the next recommendation. Next was banks should use information and communication technology to improve transparency. That is the use of ICT. Information and communication technology can improve the transparency of the working of banks. Things become more transparent and there would be proper accounting as well. RBI should adopt CORE. CORE is centralized online real-time exchange banking solution. That is eKuber. eKuber is the core banking solution of RBI. So, this committee also recommended the adoption of CORE or the centralized online real-time exchange. Next is banking ombudsman. You all must be aware about banking ombudsman, or you must have at least heard about banking ombudsman. Whenever you go to a bank, you would have seen that the banking ombudsman contact details are provided there. So what is the purpose of a banking ombudsman? Banking ombudsman is responsible for grievance redressal. If any of you or the customers of a particular bank has any grievances, then it can be sent to the banking ombudsman. It's the customer grievance redressal agency. Why? This will ensure that banking services are more approachable for the customers. Now, for example, you avail some service and you have some grievances or you have some complaints regarding that, but there is no particular body or nobody or no institution to go and tell your complaint. You would feel it very awkward. Because as a customer, when you avail a service, you also have the right to get it rectified. So, banking ombudsman was created in that sense to give a speedy and expeditious recovery or redressal to the grievances of the customers. Next is Debt Recovery Tribunal, DRT. Debt Recovery Tribunal should be established to enable banks to quickly recover from the dues of the defaulters. So, Debt Recovery Tribunal, DRT, should be established in order to enable the banks to quickly recover from the due. Now, a tribunal, the purpose of a tribunal is to settle things without going for a litigation. Litigation is legal action. Without going for a legal action, settle down the issues. That is the purpose of a debt recovery tribunal. So DRT or Debt Recovery Tribunal was established according to the recommendation of this committee. Asset reconstruction companies, which are these days known as bad banks. Bad banks or asset reconstruction companies are those companies or banks that purchase the non-performing assets from the banks at a discounted rate and then recover it from the customers. That is the purpose of an asset reconstruction company or a bad bank. So bad banks should be established to purchase NPA or non-performing assets at discount. This was the next recommendation. And next is RBI should deregulate interest rate. Deregulation of interest rate means that the market should be given the independence and freedom to determine the interest rate. That is deregulation of interest rate. Earlier, RBI used to decide the interest rates on different loan portfolios. Now it's given to the banks itself to decide based on the market forces of demand and supply. So these were the recommendations. All the recommendations of this committee except point number 2 was accepted. Okay, point number 2, that is priority sector lending quota should be reduced from 40% to 10%. This is because of the welfare orientation of the government. So all the others were accepted. Now coming to Basel norms in some detail, in some brief, we will be discussing Basel norms differently. So what are Basel norms? These are norms or standards issued by Basel Committee on Banking Supervision. Now this Basel Committee on Banking Supervision was established by BIS or the Bank for International Settlements. Bank for International Settlements is based on Basel in Switzerland. That is a headquarters, and that's how the name Basel came for this. So these are norms or standards. These are international norms, standards or practices that the BCBS recommended. That is Basel Committee on Banking Supervision recommended for international banking regulation. The thing is that it is voluntary in nature. It's not mandatory for the central banks to adopt Basel norms. And second thing is, even though a central bank adopts Basel norms, they are given the flexibility to make changes. Why these 2 points are important? Because first thing, RBI did not adopt Basel norms until Narasimham committee recommended this. So that shows us the picture of voluntary nature of these norms. Second one is RBI also made some changes to the Basel norms that the BCBS recommended. So second point shows how flexible is the Basel norms. We will be definitely discussing about Basel norms. I have already made a video on it, but one more video I will be making. So please do watch the previous video on our channel StudyIQ English. The Basel norms is an effort to coordinate the banking regulations across the globe with the goal of strengthening the international banking system. So what is the purpose of Basel norms? To coordinate banking regulations across the globe. To coordinate the banking activities. How? By giving these standards to the central banks. And the goal is to strengthen the international banking system. Basel norms focuses on the risk to banks and financial system. The focus of these norms is to reduce the risk to the banks and financial system by introducing CAR, Capital Adequacy Ratio. Next is Asset Reconstruction Company. It is a special type of financial institution that buys debt from the bank at a mutually agreed value and attempts to collect the associated debt or collateral itself. So it's a specialized financial institution who would purchase the NPA from the banks at a discounted rate and then recover it from the collateral or from the debtor. So this is what the Asset Reconstruction Company do, and it is also known as bad banks. Why are they known as bad banks? Because they purchase the bad loans from the banks. That's why they are called as bad banks. The Union Budget 2021-22 had accordingly announced government's intention to set up an asset reconstruction company along with asset management company to consolidate and take over existing stressed debt and thereafter manage and dispose it off to the buyers for value realization. This was in the news. I have just added this to it to connect with the current context of asset reconstruction companies. So that's it about the Narasimham Committee 1, we'll be continuing this. We'll discuss about the second committee. As I said, there were 2 Narasimham committees. Second one we'll be discussing in the upcoming videos. Thank you so much for watching. I wish you all the very best.